Let's talk to Craig Erlam. He is the Senior Market Analyst at OANDA. Very good morning to you, young Craig.
Good morning.
Right, let's talk about the Great British Pound against the US dollar. You've kindly sent in a weekly chart. Now, I remember many months ago reading in the FT that fund managers, hedge fund managers, were saying this is the most difficult currency pair to trade and get an informed judgment to make a position on. Okay, I've looked at the chart and every week it seems to be ticking higher. Is it that difficult?
Well, the difficulty with the pound and dollar is not the dollar component of it. I think everyone's quite bearish the dollar and has been for quite some time. The difficulty is the pound, because while all currencies are fundamental driven, few have so much going on in the fundamental world that is going to have such a big determinant on which direction the currency is going to head in.
Yep.
Towards the end of the year, that was getting through phase one. Getting through March, that was getting through the transition deal. Now June, it's the Irish border once again, and the possibility of talks with with a new deal, and then getting to the end of the year without any disruption. And that includes the likes of today, the House of Lords debating an amendment to try and keep us within the customs union. There's so many hurdles as part of this deal that there is a lot of uncertainty still. But as you can see from the chart, so far things have gone relatively smoothly.
Yep.
In that we've got the transition deal sorted. The Irish border hasn't completely posed a problem as of yet. We've got through phase one into phase two. So that's basically being reflected in the chart. This is always how something like this was going to play out. You have the post-Brexit turmoil, you have the worst case scenario being pretty much priced in, and then as you start to see gradual improvements, the currency starts to tick back. This isn't necessarily true reflection on how much progress has been made, because if you look at, say, the sterling currency index, where it measures against a basket of currencies,
yep.
So this is taking into consideration the euro, this is taking into consideration the yen, for example. We're not back at pre-Brexit levels like this chart suggests, but it does show quite a significant improvement. And now we're talking about rate hikes, and we're talking about improved economic conditions, higher wages. The data we've got this week, already yesterday we had the jobs data, 4.2% unemployment, the lowest since 1975, record high employment. These numbers are not bad, and 2.8% wage growth, I should stress as well. So these numbers don't look too bad, but I guess the uncertainty along the lines of Brexit, the fact that wages are probably only ticking higher because the cost of living grew so much that people were demanding more money.
Yep.
Is that a one-off thing because of the Brexit vote, because of the currency depreciation, the inflation that brought? Inflation is coming down slightly, so will that relieve some of the pressure on the Bank of England and therefore relieve some of the pressure on this currency pair? That's some of the uncertainty which is all created into this.
Okay, so we both know some technical analysts who don't look at the fundamentals at all.
Yeah.
And maybe this is a currency pair that you purely look at the technicals, because the technicals have been saying for many, many weeks, you buy Great British Pound.
Well, the theory with technical analysis is you don't need to know the fundamentals, because as soon as something becomes known, it becomes priced in, so it becomes irrelevant. Fundamentals is effectively used to explain something that's already happened. It can be used obviously to forecast, because you can say I anticipate that the next round of negotiations go well,
yep.
Which should be beneficial for the pound, or I anticipate a roadblock which they may not be able to overcome, so I think that'll be bearish for the pound. So you can work both ways, but the technicals assumes all known information is priced in, and you're getting an idea of sentiment in the market based upon that. So we're looking at the technicals now, for example.
Right,
and you
so
can
what are the technicals telling us at this stage?
Well, the technicals are telling me at this stage that we are approaching a level which I think could potentially see some profit taking.
Right.
We've seen a very strong rally, but if we look at, say, the chart, for example, you've got the 200, 233-day moving average bands, week moving average bands here. They have been resistance and support previously, you can see earlier on in the chart, but even beyond that as well, these were notable bands of support and resistance as well. This is also the highs of the 2016 period pretty much throughout, barring that one spike on Brexit Day when things did go a little bit wild.
Yep.
So we are approaching a zone that has previously been resistance, and from an average perspective could potentially prove to hold some resistance as well. It's worth noting that's around 45, 46, so there is still some room to the upside potentially, but when I'm looking at these levels, I'm looking at, are people who are long going to be looking to take profits at this level? And if so, what will that do to the momentum shift and people's buying appetite, selling appetite, etc.? So this looks like a level to me where people could be looking to take profit on any long positions. So that's not advice, of course. This is just trying to get into the mindset of people who are already currently long.
Yeah.
So you look at the momentum indicators at the bottom and you're saying, is there any evidence that people are maybe taking some profits? Is there any evidence that we're seeing here? And you look at the MACD indicator on the bottom. The moving averages have flatlined and actually dipped very slightly with the most recent high. The most recent high, we haven't actually even taken that out quite overly aggressively. We've
Divergence.
just made a new peak, but we haven't really, that hasn't taken us off to the next level. The MACD histogram has got a very clear divergence. The stochastic has got a very clear divergence. Now, as price progresses, that may change, but I'm keeping a very close eye on that because the early signs from this is we've made a new high in price and we're not making corresponding new highs in the momentum indicators. That's a negative divergence, and that's a warning sign that could be some profit taking place around these levels. Like I say, we're only trading at around 143 now, 145, 145 around there is the level which I think we could really start to see this kicking in more aggressively if the indicators do continue to show that profit taking is taking place, if that makes sense. At which case, I'm not saying that I'd become particularly bearish at these levels, but corrections are normal. We've already seen plenty of corrections as part of this rally. Corrections are normal. Maybe that will trigger some corrections. And also, you're looking at the dollar. The dollar's seen so much weakness for so long now. That can't continue in a straight line, I think. So it'll be very interesting to see, is what I'm saying, what happens over the coming, over the near term in this pair, because we're approaching a level where I think it looks as though momentum's falling and it's a logical profit taking.
Well, I think just lastly, I think I'll stick to the technicals and not the fundamentals on this particular currency pair. Craig, thank you very much for your time.
Thank you.